Good morning, ladies and gentlemen. Greg Michalowski from ForexLive.com. Today's date is December 16, 2024. This is the Kickstart video where I take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar from a technical perspective. So let's get started. I'm going to start by taking a look at the euro versus US dollar, focus on the hourly chart. In trading last week, it was clear that the 200-hour moving average, that's this green line in this chart, was the topside resistance level that traders would lean against. Not once, not twice, not three times, not four times, not five times in trading here today. There are two other times where the price came up to that 200-hour moving average and found a ceiling against that level for the sixth and seventh time, I guess. And the price rotated back to the downside. We are trading near unchanged levels. We do have this cluster of moving averages, including the 100-bar moving average on the 4-hour chart, the 100-hour moving average. That's this lower blue line right here, which provide close resistance for the pair, but ultimately, if the price is going to stay more focused on the downside, staying below 200-hour moving average is needed. If we do move above it, we'll look toward the 38.2% retracement and then up toward the 200-bar moving average on the 4-hour chart, along with this swing area right through here, which comes between 1.05926 and 1.06097. We're going to need to move above the 10 level to further increase the bullish bias to the downside. Alternatively, as long as the price remains below the 200-hour moving average, the bias remains more to the downside. On the downside, we have this swing area through here, where we had a number of different swing lows forming this floor. Yes, we moved below the floor right here and right here, but most of the time the price is, and certainly more recently over the last 3 or so weeks, price has found support between 1.0448 and 1.04610. So getting below that level is going to be step one for the pair. If we do, then we'll look toward this low right here at 1.0424, and then look to break the 104 level down to the low price that we saw in the month of November, down at 1.0332. Let's take a look at the sterling versus US dollar next, and again, we'll focus on the hourly chart. And when I look at the hourly chart, the pair has been supported by better PMI data this morning out of the UK, which pushed the price up back to the upside. We do have a Bank of England interest rate decision this week. They're supposed to keep rates unchanged. Last week, of course, the ECB cut rates. The US is expected to cut rates this week by 25 basis points, but that may be it for the US. But this area right through here is going to be a target level on the top side that we need to get above in order to increase the bullish bias. And you can see how the price came right up to the high of that area and found willing sellers against it, but now pushing back toward this area between 1.2659 and 1.2670. If we get above that level, we do have a cluster of moving averages still to get to and through, including the 200-bar moving average on the 4-hour chart, the 200-hour moving average, the 100-hour moving average, and this 100-bar moving average on the 4-hour chart. All of them come in successive higher levels, and getting above each is needed to tilt the bias more to the upside. If it can't get above those levels, then we could see a break of one and then a rotation back down from the other. So it's always a long slog when you're below the moving averages, but that keeps the bears more in control, and that's what we're trying to do when we look at technicals and technical tools, is figure out what is the bias. So the bias, although we're higher today, is still lower because we are below those moving averages. Now, on the downside, we do need to get below this swing area down through here in order to increase the bearish bias. If we can't get through this level right through here, then the battle remains, and you can see on Friday's trade the market did, and earlier today, as a matter of fact, the price did hold within this area down through here. So getting below that level is needed to increase the bearish bias for the sterling versus US dollar. It comes between 1.2596 and 1.26147. Finally, let's take a look at the dollar versus yen. And again, we'll look at the hourly chart, and this currency pair has been trending more to the upside after trending to the downside through most of the month of November into December. So November's lower at least for half of the month, and December's higher for at least half the month. And the move to the upside here is taking the price to the highest level going back to November 26. We also moved above the 61.8% retracement, which we temporarily found resistance sellers against in trading last week. That's right here. before breaking above and failing, and then coming down to this swing area through here. This swing area is defined by a number of different swing lows and swing highs going back to this period right through here. You can see the number of different times the price found this support against this level. We fell below here briefly and then tried to hold it here before breaking to the downside through here. So we returned back to that area right through here and tried to hold support, and we have so far. So the buyers are more in control because of these holds right through here. We're going to need to get below this area right here between 153.26 and 153.46 to increase the bearish bias and have traders looking down toward our cluster of moving averages like the other charts show. But right now the buyers are more in control. We're also above this area right through here, which comes in at 153.88 and 61.8, 153.64. Stay above those levels is even more bullish for the pair. The next target comes in against this high right here, which comes in at 154.71. Get above that level, opens the door for further upside momentum. Do we retrace all of the December, mid-December to or mid-November to December low and go all the way back up to 156.74? As long as we stay above these levels below, the bias remains more to the upside. So there you have it, a look at 3 of the major currency pairs that kickstart your trading day and trading week. My name is Greg Michalowski. Look forward to trading. Bye-bye now.